Hey everyone, welcome back to Corporate Decoder, the place where we break down these dense corporate filings and find out if the company is playing chess or checkers. And judging by this filing, it looks like Movano Inc. might be trying to make a big move with their stock. So what's going on with Movano? They're holding their annual shareholder meeting, and boy do they have some interesting proposals on the table, including a reverse stock split and a massive increase in authorized shares. Let's dive into the details and see what this all means for the company and its investors. First things first, they're holding their annual meeting on September 26th, virtually of course. This means you can attend from anywhere, which is pretty standard these days. But the real news is what they plan to vote on. One of the main points is electing 2 directors to the board. This is pretty standard stuff for an annual meeting, making sure the company has the right people leading the ship. Now, here's where it gets really interesting. They're asking for approval for a reverse stock split. Think of this like cutting a pizza into more slices, but each slice is bigger. They can do this anywhere from 1 share becoming 2 up to 1 share becoming 15. The goal here is usually to boost the stock price. Why are they doing this? Well, it looks like they're in a bit of trouble with Nasdaq. Their stock price has been below $1 for a while, and Nasdaq has rules about that. This reverse stock split is their way of trying to get back into compliance and avoid getting kicked off the Nasdaq capital market. If they don't fix this, their stock could be delisted, which is never good for investors. And then there's this bombshell proposal. They want to increase the number of authorized shares of common stock from 500 million to a staggering 2 billion. That's a 300% increase. They say this is to give them more flexibility for future financings, acquisitions, or other corporate needs. But with that Nasdaq issue and an exploration of strategic alternatives, that also can be a way to make sure they have enough shares available if they need to raise a lot of money quickly. Maybe even through a sale or merger. It's a big change, and it means they can issue a lot more stock in the future, which could dilute existing shareholders if not managed carefully. Let's look at who owns what. As of August 2025, the total shares outstanding are around 8.3 million. We see Emily Wang Fairbairn, a director and chair of the board, has a significant stake, around 5.9%. She also has extensive executive leadership experience from her time at a hedge fund, Ascend Capital. Then there's Michael Liebman, the founder and chief technology officer, holding about 4%. His background is in tech and founding companies in the wireless space. And John Mastrototaro, the CEO, has about 5.2%. He's got a long history in the medical device industry, leading innovation. When we look at the breakdown of directors and officers, it's clear they have skin in. Emily Fairbairn owns 480,60 shares, translating to 5.9%. Michael Liebman owns 216,163 shares for 4%. John Mastrototaro holds 246,221 shares, also around 5.2% of the company. These are pretty substantial holdings for key people. Peter Apple is a major shareholder, holding 9.9%. His address is listed in Coconut Grove, Florida. The total shares held by directors and executive officers together amount to a significant 21.1%, which is usually a good sign of alignment. Now for compensation. The named executive officers here are John Mastrototaro, Michael Liebman, and Jay Kogan. John Mastrototaro, the CEO, earned a total of over 600 on 4024. That include a base salary of about 361,000 and over 2060,000 and over 260,000 and over 2060,000 in stock awards. Michael Liebman, the CTO, made about $16,000 total, with a salary of 347,000 and stock awards similarly valued at almost 269,000. And Jay Kogan, the CFO, had a total compensation of about 385,000 with a salary of nearly 300,000 and stock awards around 85,000. It's important to note that a big chunk of their compensation comes in the form of stock options and awards, which is a common strategy to tie executive pay to company performance and stock value. Looking at their outstanding equity awards at the end of 2024, there are a lot of options and unvested stock awards. For example, John Mastrototaro has over 19,000 exercisable options and several grants of unvested options with different strike prices and expiration dates. Michael Liebman also has a significant number of unvested options. This shows that their incentive for growth are heavily tied to stock performance. Let's go back to the reverse stock split proposal. They're really pushing this. They explain that if approved, each issued share of common stock will be reclassified into a fraction of its current size. They give examples like if it's a 1-for-2 split, 8.3 million. If it's a 1-for-15 split, it shrinks to around 550,000 shares. This is all aimed at getting that share price up to meet Nasdaq's minimum bid price rule. They also wisely include a warning here. They admit that a reverse stock split doesn't guarantee a higher stock price in the long run. The market can be unpredictable, and other factors like their actual business performance will matter more. Also, a reverse split can sometimes make the stock less liquid, meaning fewer shares are traded, and it might make it harder for small investors to buy or sell in odd lot sizes, potentially increasing their transaction costs. And then there's that massive increase in authorized shares from 500 million to 2 billion. This sounds like a lot, and it is. They justify it by mentioning they're exploring strategic alternatives like a sale or merger. Having more authorized shares ready to go can make those deals easier to structure, whether it's for financing, acquiring another company, or offering stock as part of a deal. But it's a double-edged sword, as it can also lead to significant dilution for current shareholders if new shares are issued without a corresponding increase in company value. Finally, they're ratifying the appointment of RBSML as their new independent auditor for 2025. It seems their previous auditors, Moss Adams, resigned. They mention some material weaknesses in internal controls from the past few years, which is a red flag. This new auditor will have the task of assessing their current financial reporting and internal controls. The audit committee is comprised of 3 independent directors. They reviewed past financial statements and discussed them with management and the departing auditors. They also discussed the independence of the auditors. Looking at related party transactions, we see that several directors and officers participated in various share offerings in 2023 and 2024. For example, Emily Wang Fairbairn purchased a significant number of shares in the January and June 2023 offerings and the April 2024 private placement. John Mastro Totoro also participated in these. These transactions show that insiders were actively investing in the company, which can be seen as a sign of confidence. Now, let's put on our Warren Buffett hat, even if briefly, to look at the bigger picture. Movano is clearly in a fight to stay listed on Nasdaq. Their stock price has been struggling, leading to the proposed reverse stock split. This is a common, though sometimes risky, maneuver to boost the stock's public image and meet exchange requirements. The huge increase in authorized shares suggests they're preparing for major corporate actions, possibly a sale or significant new financing, especially given they're exploring strategic alternatives. The executive compensation is heavily weighted towards equity, which aligns them with shareholders, but the company's recent performance, as indicated by the stock price, suggests these equity awards haven't translated into sustained stock value appreciation yet. The mention of material weaknesses in internal controls from their previous auditors is a concern that the new auditors will need to address, and investors should watch how this evolves. Overall, Movano is in a critical phase. The decisions made at this shareholder meeting, particularly on the reverse stock split and authorized share increase, will significantly shape its future. They have experienced leadership and the insider participation in offerings is mildly positive, but the core challenge remains improving operational performance to justify its stock valuation and ensure long-term viability. Alright, that's our breakdown of Movano's latest proxy statement. What's your take on these proposals and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description below to continue the conversation and connect with other curious minds. Thanks for watching. See you next time.